now tuned into the Money Level Show.
Hey, Rick, welcome back to the show.
Pleasure to be back, Daryl. Thank you for having me back.
Yes, appreciate it. So just to kick us off, I mean, we have the Rule Symposium coming up, and you all be sure to click the link in the description below. And Rick, let's just start off with that. Like, what can people expect from the symposium if you want to give them the? I know it's so much value; it's hard to communicate it in like 2 minutes. But if you were to give like the high points, and then you all be sure to go click the link in the description below so you can get the rest of the value. Could you give the audience that?
Yeah, I mean, listen, we're coming into the period of time that you and I have talked about in 3 years of interviews. And if you weren't prepared, it's not going to be pretty, you know? And this symposium is all about what you're going through today and what you can do about it. Things that are in the news, the big picture stuff. We start off by dealing with the big picture stuff. We're going to have Daniela DiMartina Booth, who talks about the Fed. And she's not talking about it, Daryl, as a journalist. She was a researcher for the Fed. Nomi Brenz is going to talk about the leverage structure of Wall Street, not as a journalist, because she was a partner at Goldman Sachs. um, Department of Government Efficiency is in the news. We're having David Stockman, who ran the Office of Management and Budget in the Reagan administration, talk about that, talking about the derailment of the Reagan Revolution 6 months after inauguration. In other words, we're going to talk about the way the world is, not the way the big picture thinkers wish it was. And we're not going to have failed journalists talk about it. We're going to have players, people who were in the very institutions that they talk about. This is critical stuff. Once we've gone through that, once we've explained how taxes impact your family, how the budget deficit impacts your family, how debt impacts your family, how turmoil on Wall Street impacts your savings and the necessity of savings, because the government's not going to be able to protect you. We're going to talk about how to do that specifically. We're going to talk about people who've made money in natural resources and precious metals for decades. And I guess the best guarantee that the conference is going to work for folks is twofold. One, this is the 30th year we've done the conference, so we've been serving the market for a very long time. But much more importantly, Daryl, unlike any other investment conference on the planet, if you sign up for my conference, I give you an absolute money back guarantee. If for any reason attending live or via live stream in the comfort and convenience of your own home, you don't think you got your money's worth, email me and I'll give you your money back. Uh, this is an investment with no financial risk. I don't know anybody else who's willing to do that. And by the way, you don't have to come to Boca Raton, although I think you should. People from 33 countries watched the conference online with live stream last year. So if you are unable to come to the conference, attend from the comfort and convenience of your own home or office via live stream. Either way, two things. Either way, you get tapes, recordings of the conference for a year, and you're going to need them because, as you know, Daryl, we give people 50 hours of instructional programming in 4 days, and nobody can absorb all that. So you're going to have to go back and play the recordings to get it all. But the second thing is, if you don't think for any reason I didn't give you your money's worth, I'll give you your money back.
Hey, that's amazing value right there. So there's a few things I want to dive into. I've been waiting for this conversation. So we've talked about the importance of having a longer term view in the markets. We had a lot of people get very emotional about the recent downturn in the equities, especially equities like uranium. Many of these stocks got just decimated recently with the tariff news and such. And you know, obviously, I know that you see this as more of an opportunity, right? And so I want to dive more into that because um, the wisdom that you have from investing and being in the markets for, I think you mentioned 50 years, something like
Sadly
that.
true. Sadly true.
you know so I kind of want to get some more perspective for the audience and us that are weathering these storms, because for me, when I saw the big downturns, I bought more. without hesitation, we've talked about being courageous whenever there's opportunity in the market. Um, Warren Buffett talks about buying when there's blood in the streets and such. And so for me, I actually went in and purchased a good amount of shares of these different companies. And so that I already felt was very valuable. And then now that they're cheaper, have even more value since the price is cheaper. So I just want to get your some wisdom from you in terms of people navigating these rocky markets.
Daryl, there's three lessons there, I think, at least three. The first is that, a lot of people have the right 5-year strategy or 5-year narrative, but they employ 3-month tactics. If the time preference between your narrative, your strategy and your tactic is wrong, you're likely to lose money. A second thing is, in terms of speculation, sometimes people buy too big into the narrative. Somebody who's really terrified about uranium may be somebody who has too much of their net worth in one speculative theme. Uh, it's there can be a case where, despite the fact that you believe in something, you have to believe in it within your psychological and financial means. But the most important lesson is that price information, including share prices, has no value if you don't have a value assumption. The fact that something is selling for $1 a share is interesting, but it isn't relevant unless you think it's worth 50 cents a share, in which case you sell it, or in case you think it's worth $2, in which case you buy it. The people who really get scared about price perturbation, price volatility, are people who understand the price, but they don't understand the value. And those people are going to get victimized. Listen, I've ranked tens of thousands of portfolios over 25 years, and people make a lot of consistent mistakes. They don't have opinion as to price. Their technique has got a hunch, bet a bunch. They don't have a sense of the time it's going to take for the narrative to come true, which they need. And they own way too many stocks, more stocks than they can understand. We've asked people to own the number of speculative stocks that corresponds with the number of hours per month they're prepared to spend on their portfolio. If you correct those three shortcomings, you're going to do fine, but you're headed in the right direction. The fact is, you were attracted to the narrative. You began to do the work to determine whether or not the stocks were correctly valued or undervalued. And once you had the courage of that conviction, when the share prices fell, you were able to take advantage of that correction, add to your position, as opposed to getting shaken out of it.
hmm And so this speaks a lot to like margin of safety, especially with, when you have a price from your valuation of whether it's net asset valuation or however the different ways that people evaluate the stocks that they own. Um, and then when you're able to buy those significantly cheaper, it just gives you even more margin of safety. And so, like, how do you factor in that margin of safety when companies fall significantly, um, like to the levels that they recently did?
Well, I'll give you an example. I have a long history with Paladin. Long history with Paladin. Very recently, they took over a company called Fission. I was attracted to Fission because Fission has a property on the western side of the Athabasca Basin that adjoins a property controlled by NextGen. And I think those two properties likely have to be built together. And if they're built together, they're the finest undeveloped uranium property in the world. In other words, I really like this thing. The lesson comes from the fact that Paladin, after having taken over Fission, the combined company is selling for less than Fission was before the takeover. You get the bigger company for free. Now, something could go wrong with this, something could go wrong with this. I'm not trying to say that you bet your whole wad on a pre-revenue company, but the truth was, if you thought it was reasonably priced below the merger, and now it's fallen by 75%, if you are still attracted to the uranium thesis, if you've done your homework, why wouldn't you be attracted? It's as though, I know you live in the Northwest. It's as though It's now September or something. You're coming into the cold season and you're going to the store to buy a coat. Are you going to prefer a full price coat or a 75% off coat? You know,
Yeah,
this isn't rocket science.
yeah, yeah, for sure. Yeah, I mean that's really really insightful, especially they acquired another asset with a lot of land in the Athabasca Basin and everything, and if they're selling for cheaper, that's almost a no-brainer.
Right.
Um, so I want to get your perspective on oil. We saw oil fall significantly recently, and obviously there's the near term, and then we have the long term. And so in the near term, there's was a lot of things with the tariffs. There's been some news out of OPEC and such, and so I don't know how much that weighed on it. I mean, some of it's recessionary fears. Some people are saying we're already in recession. Jamie Dimon has been very vocal about recession. Goldman Sachs as well. And so, what's your take on oil and the oil stocks right now?
I think the oil price tells us that we're already in a recession. I'm not smart enough to know that we are or we aren't. But oil is short term, extremely economically dependent. Copper might talk about a recession 2 years from now or 3 years from now. Oil talks about a recession right now. We're at a really interesting place in the oil market. Oil has a five handle now, which is below it. It's below $60. That's an important number because the International Energy Agency suggests that the oil companies break even is $60, which is to say, if you look at the global oil industry, including the parastatal companies, Pemex, PDVSA, people like that, the industry now isn't even earning their cost of capital. If the industry doesn't earn its cost of capital for any substantial period of time, supplies fall. If supplies fall, your car doesn't start. Now, could the oil price go lower? Absolutely. Nobody cares whether your car starts 2 years from now or 3 years from now. Producers care about making money right now. But if you're looking at the longer term, we're in a circumstance where A, the price goes up, or B, your car doesn't start. Those are the only two choices. And you need to understand that when I say the industry takes $60, there are private companies in the US and Canada who have $30 break-evens. They're not as inefficient as PDVSA or Pemex. So there's lots of opportunity in that space. If you want to be a bit more sophisticated and talk about the reason for the rebound, we've talked about that before. On a global basis, the industry is underinvesting about $1 billion a day in sustaining capital investments. That means that 2 years out, 3 years out, 4 years out, absent some sort of technological breakthrough or an ugly recession, we have a production shortfall. The second thing is that the increase in global production has largely occurred in the US. And that has been a function of very efficient capital markets, a very low cost of capital, and technological advantages that made historic basins like the Permian Basin much more attractive. It's important to note that the Permian Basin worked extremely well at $70 or $75 a barrel. It works much less well at $55 a barrel. It's also important to note that the Permian Basin worked well at a lower cost of capital. But as the price of oil shares goes down, their cost of capital increases. And as the interest rates rise, and they've doubled in 2 years, their cost of capital goes up too. Finally, the industry estimates that the number of undrilled tier one locations in the Permian Basin is now 15% of total inventory, which is to say that the vast majority of the really good locations, the locations that became economic as a consequence of horizontal drilling and multi-stage fracturing, management well drilling, the majority of those locations have already been drilled. So the ability to materially increase production there, absent an increase in the oil price or a decrease in the cost of capital or the development of new technologies, is fairly low. There is a lot of room to drill in Canada. However, the leading contender to be prime minister in Canada, Mark Carney, is, like his predecessor, Justin Trudeau, anti-oil. So, for me, I think in 5-year terms. The oil industry has treated me well for 50 years with occasional really ugly hiccups in that. And I suspect it'll treat me well for my remaining lifetime. For the record, I'm a very healthy 72 years of age.
Hmm. So with the oil market, I know in the Permian, when there's been drilling, like uh, there's less oil coming out, more natural gas, to my understanding. Um, and we do have like this kind of sentiment around uh, making it less regulatory for oil companies to produce in America under the current administration. There's been talk about the pipelines and such, and then and I'm kind of just wondering like how long does this even take to uh, even make that come to fruition? So I don't know. We had the drill baby drill and just everything, and I just don't right now. It just feels like run baby run. When you look at the prices of the shares, and so yeah, it's kind of what's your take on how the government is with the oil markets? I mean, because that's another we're here for like another 4 years pretty much, and so I want to get your take there.
I'm in my lifetime never expecting any government, Republican or Democrat, to do me any favors. Let's get that one out of the way. To the extent that Mr. Trump can reduce the regulatory burden in terms of pipeline construction, that would be a good thing. But I'm looking to the market, not the president. A year and a half ago, Daryl, I said on your show that at $1.25, $1.50 per million BTU, that natural gas was just too cheap. That the market was going to take care of it, that low prices would be the cure for low prices. 2 years later, the price is $3.50. Price is up more than double. Markets take care of itself. A prolonged period of oil prices in the high 50s, coupled with inflation on inputs, uh, coupled on higher cost of capital, problem's going to take care of itself, irrespective of the president. Could he make things better? Sure. He could improve the regulatory climate for natural gas gathering and oil gathering, for oil transmission, for the construction of natural gas liquefaction plants. He could do all those things, and that would be wonderful. But the market is much bigger than the president, despite the president's beliefs to the contrary. Now, one thing the president could do is he could, how could you say, he could derail the impediments to trade. Make no mistake, tariff or taxes, and taxes are bad. You can identify them. If you're a steel worker in Ohio, what you think is that you shouldn't have to compete with $5 an hour 22-year-old workers in China. I get that. But the steel consumer disagrees with you. And so by eliminating tariffs and promoting free trade, people who do things more efficiently than other people contribute to the wealth of consumers around the world. The trade war that we seem to be entering into will make everybody poorer, and it will weaken the economy. So if Trump really wanted to do something for the oil industry, what he could do is develop stronger, negotiated, yes, but stronger, not weaker trade ties.
Hmm. Yeah, yeah, that's pretty interesting. I've never thought of it that way. The um, how the people that want higher, manufacturing to come back and such, and like how they're competing with the consumer.
Right.
like,
You
like
know, that's how these laws get passed, Daryl. There's a few people, steel workers, maybe 50,000 of them, I don't know, 25,000, some number, who benefit a lot from the tariff. They benefit so much that they're willing to vote based on that one issue and give campaign contributions. There's millions of people who are victimized by it. Their losses are much greater than the gains experienced by the few, but they're less motivated because the amount of money they lose compared to the amount of money made by those who benefit is so much smaller. That's why H.L. Mencken once said that elections are everywhere and always advanced auctions of stolen property. All it changes is high bid.
Mhm.
The reward to the producer from tariffs, the reward to a few people is always high, while the costs, while larger, are diffuse.
Yeah, 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 definitely, definitely. So Rick, just transitioning really quick to gold. We had gold at, I think it hit 3250 at some point here in the recent few days. So there's been a lot of talk about the miners waking up. Um, the miners have started to perform a lot better than they have in
Yeah.
recent years. And same thing with royalty and streamers. And I was kind of just wondering, except one, which I want to chat with you about. Um, so I was kind of wondering, if this is a fake out, or I mean, because like if we're heading into recession, right? It's I know we've seen like in the 2008 um, situation, gold hits an all-time high, gold corrects, and then it starts to run again. And so I'm like, okay, is gold going to correct at some point to, 2,500, 2,600, and the miners are going to correct as well? And so I just wanted to kind of get your take on that.
That could easily happen. That could easily happen, but it doesn't derail the case for gold. The idea, well, Bernard Baruch once said the only guy who absolutely bought at the bottom and sold at the top was a liar. It didn't happen. So that's important to note. People were until a year ago saying to me, Rick, when do you think the gold price is going to move? When's it going to go? And I'd sort of scratch my chin, and I'd say, well, I think it's going to move in the year 2000. Gold was $253 an ounce, went up to 3,000. Hell, it's up 12-fold in 25 years. What do you want? Up 9% a year compounded for 25 years. Now, you said a couple other things that bear repeating. The gold price moved a long time before the gold stocks did, and that confused some people. The answer was simple. The gold price moved because the central banks were buying it, not living, breathing human beings. And central banks don't buy gold stocks. About 12 weeks ago, you can see from the inflow of retail funds into physical gold ETFs, the broad public came in the gold market. And the broad public also buys gold stocks. And lo and behold, when the buyers came into the gold stocks, they started moving too. Listen, we're in a gold bull market. Okay, we're there. Um, the set of circumstances around debt and deficits, the set of circumstances around interest rates below the purchasing power deterioration of the dollar, we're there. Does that mean that gold and gold stocks couldn't fall precipitously? No. Let me give you a piece of history. In the period 1970, when the price of gold was decontrolled by the president, to late 1974, the gold price went up from $35 an ounce to $200 an ounce. Inflation was on everybody's lips, everybody's scared of inflation. The gold price went up sixfold. Pretty good move. In 1975, they raised the interest rate to kill inflation. And a lot of people don't recognize this, especially people your age who might not have been born then. But the gold price fell from $200 an ounce all the way to $100 an ounce in 1975. But that increased interest rate tanked everything else too. Tanked the bond market, tanked the stock market, tanked the real estate market. Congress lost their nerve and they reduced the interest rate again. And then the market knew all bets are off. When that happened, people who got scared when gold fell from $200 an ounce to $100 an ounce missed a move in 6 years from $100 an ounce to $850 an ounce. So could the gold price fall from 3,200 to 2,500? Absolutely. You give me the use of the word could, I can tell you anything I want. The point is that it's highly unlikely that the purchasing power of the US dollar does not deteriorate by 75% over the next 10 years. Notice I said 10 years. In the period of the decade of the 1970s, when the purchasing power of the US dollar fell by 75%, the gold price went up 30 times. Now, I'm not suggesting that the gold price is going to go up 30 times, but I am suggesting that the purchasing power of the US dollar is going to decline and decline by a lot over the next 10 years. So the probability is that even if we have a setback in the gold price, that people will want to own it to defend themselves against the deterioration of the purchasing power of the US dollar.
Hmm. Yeah, that's definitely helpful insight. I mentioned there was one company that hasn't really moved, and I wanted to get your take on this because I've learned about this company from you, and so you all, if you attend the Rule Symposium, you're able to get a glimpse into Rick Rule's portfolio. So this company is Gold Royalty. So I've been investing in Gold Royalty, and I'm looking at the charts, and over the last year, it's down 22%. But when you get to like Sandstorm Gold, up over 50%, Wheaton Precious Metals up over 50%, and even Franco Nevada is up over 30%. And so I mean, it seems like a buy to me, but I kind of wanted to get your take there on maybe because Gold Royalty may not be as known as the others, or smaller market cap, but just kind of wanted to get your take on Gold Royalty.
I think this is not investment advice, but I think for speculators, Gold Royalty probably is a buy. I think it fell perversely because it did so well 5 years ago. It got ahead of itself, and that stock has had to deflate. I think that's important. I think the second thing is that the latter half of 2025 and 2026 is when you're going to start to experience the revenue growth in Gold Royalty, particularly the Cote Lake royalty. And I think that's going to be important. The revenue growth that you saw occur in Sandstorm began 2 years ago, although the Hod Maden revenue growth hasn't increased. But you've seen systematic revenue growth in Sandstorm. In Sandstorm too, the company had way too much debt, and that scared people. The cash flow allowed them to pay down the debt. So a transformative event has already occurred in Sandstorm, where the transformative event occurs in Gold Royalty a year from now.
Okay. Yeah, that makes total sense. And so yeah, I mean, I've been kind of just keeping an eye on it, in terms of like, just looking at, okay, I'm seeing the bigger royalty and streamers move. I mean, obviously Franco Nevada is the premium creme de la creme,
Yeah, that's the best.
Wheaton Precious Metals as well, and then Sandstorm. And so
Daryl, to any of your folks who are interested in Gold Royalty, you can Google my interview with Gold Royalty. It's only about 7 days old.
okay.
And you can watch me asking my normal nosy questions of the CEO of Gold Royalty. It's very worth doing. He's a very bright guy. And when he talks about how the management team plans to unlock the value of all those royalties, it's a very enlightening discussion.
Okay, cool. I'll be sure to link to that in the description below for folks to go check that out. So just the last topic I want to transition to. So I watched the interview with David Stockman, and it gave me a very grim outlook on the on what type of impact DOGE can have, and the federal government um, in reducing the deficits and such. And then David Stockman talked about the fat, the muscle, and the bone, and he talked about 400 billion being the fat, 500 billion being the muscle, and the rest being the bone. And so when he got to the muscle, it was kind of like, yeah, I don't think the government's going to be able to cut this, like, veterans benefits and such. I mean, they could, but I don't think they are. And then so in recently, in looking at DOGE, so there's a discrepancy here, and I don't fully know what it is. I mean, the national debt clock was saying that DOGE had saved the government 400 billion not too long ago. I believe that was what it said. And then now it's saying 300 billion. And so that number's reduced. I have to go look at one of my older videos this year to see if that 400 billion was correct that I was seeing. But then DOGE on their site is saying they saved 150 billion, which seems like peanuts to an elephant. And so just wanted to get like, I mean, it seems like what you and David Stockman were talking about is I mean, it's the truth. It's the hardcore facts.
Well, you said a lot there, so let's try and unpack some of it. If DOGE has saved all that money, why did the Republicans just pass a continuing resolution to increase the debt ceiling? And why is their budget deficit the third or fourth largest quarterly deficit in history? If they saved all this money, where's the money? I don't see the money. What do they say? Show me the money, right? Many of your listeners won't know who David Stockman is. It's important to know that David Stockman was the guy who ran the Office of Management and Budget in the Reagan administration. He ran the first Department of Government Efficiency. Mr. Trump, he won election by a little tiny margin. Ronald Reagan won the presidency by a great big margin. There was a mandate to reduce the size of government, and Congress eliminated that mandate in about 6 months. You wisely listened to David Stockman talk about how you actually cut $2 trillion from the budget. And it's truly ugly. It is truly, truly, truly ugly. The probability, Daryl, is that they're not going to be able to do it. And that has two, at least, potentially important impacts for your listeners. The first is that the way that you avoid a default if you don't cut the budget is that you inflate away the purchasing power of the US dollar so that you honor the nominal obligations in the budget, but you reduce the real obligations. You say to some, fat old bald Social Security recipient, name a Rick Rule, you've been promised whatever they promised me, $4,000 a month or something, and we're going to continue to pay you the $4,000 a month, but we're going to reduce the purchasing power of the dollar so that $4,000 only buys you $1,000 worth of goods and services. We did that in the decade of the 70s. They reduced the purchasing power of the US dollar by 75%. So your listeners who are thinking about how much kind of savings they're going to need to go forward are going to need to understand that fixed amounts of money are going to buy a lot less stuff, which means you're going to have to consume less now and save more because what you are hoping the government is going to do for you, the government's not going to be able to do. And you're going to have to change the character of your savings. You have to maintain liquidity. You have to have some cash, but you need to understand that your returns on cash are negative. If you own a treasury bill and you're getting paid 4.5% in a currency where the purchasing power is declining by 7.5%, you're losing 3% a year. You have to do it because you're going to need some cash, but you got to understand. Now, in the decade of the 70s, remember that the purchasing power of the US dollar, according to the US government, declined by 75%, and the gold price tripled, went up 30-fold. I think that people are going to have to allocate some of their savings to the type of investments that traditionally have done well during periods of time when purchasing power denominated in fiat currency and instruments declined. Natural resources, gold, mundane companies with huge market share that can increase their pricing to keep pace with inflation. Things you don't even think about, like Hershey's chocolate. They can take the price of a candy bar up 7%, or they can reduce the size of the candy bar and they can get away with it. But other kinds of companies don't have that leisure. And what's important about this discussion is not to get depressed about it. It's a given. We're going to get through this. We're going to be challenged. The people who think and act are people who are going to get through the challenges with less problems than those who don't. But make no mistake, you have to consider the difficulty and you have to make plans going forward. I saw something today, I think, on the internet that was just absolutely scary. They have this big rock concert down in California called Coachella. I will admit I've never disgraced the place with my presence, but that's a different question. Over 50% of the people who bought tickets to a rock concert did so on the installment plan. They couldn't afford to go, so they bought their tickets on time. Now, these are people who are not going to have a good experience in the next 10 years. If you can't afford a consumer good, you can't afford a consumer good. The fact that you can't afford it today doesn't make it more affordable with interest over time. I think, Daryl, are living in a circumstance where people are confusing the experience they had in the last 40 years, the most benign economic time in human history, with what they're going to experience in the next 10 years, which is going to be a lot less pleasant. Those people who listen to your podcast and take to heart your save, invest, prosper, they're going to do fine. But those people who don't are going to have a much worse 10 years in front of them than the 10 years they just went through.
Yeah, yeah, yeah. That's that's just the facts. That's just true. But I mean, it is saddening, a saddening truth. So Battle Bank, Battle Bank is close to being, ready to
Yeah.
launch, and you're gonna have gold and silver products where people can, put them in IRAs, and I think IRAs, right? And such. And so just wanted to give you
A
a opportunity to share about Battle Bank.
couple good things about Battle Bank. Most of the big banks have 15 or 20 different savings products, and a bunch of them don't pay interest. Life is bad enough without getting paid interest on your savings and checking. At Battle Bank, rather than having 15 kinds of money market accounts, we got one high yield account and you get paid interest on it. You want to write a check? Do it. No problem. That's an important difference. Second thing is that we're heading into a period of currency turmoil. Last 40 years, best currency in the world was the US dollar, period, full stop. That wasn't true in the decade of the 70s. And so at Battle Bank, you're going to have the opportunity to save in 20 currencies, not just the US dollar. If you, let's say, do business in Canada and the United States, maybe part of your savings needs to be in Canadian dollars because you're going to be spending them. If you think that the Swiss franc is going to do better because they have so much less debt than we do, or the Singapore dollar is going to do well, you have the ability to do that. Uh, I advocate precious metals ownership. If you don't own precious metals, Battle Bank will happily buy them, sell them, or store them from you. If you already have precious metals and you need to access credit for any reason but don't want to sell your precious metals, Battle Bank will loan you money against those precious metals. Let's say that you have $100,000, in gold, and the opportunity comes up to buy a distressed rental property or something. You need $50,000 for the down payment, some number like that. You need 100,000. You have 50 cash, but you don't have the other. You'll be able to borrow that money secured by your gold. You don't have to sell the gold to make a different investment and then repay your gold account over time. Using credit for the purchase of something that goes up in value, using credit to buy you an income stream that is greater than the cost of the capital that you pay in the loan is not the same as borrowing money to go to a rock concert. And for that reason, we're establishing at Battle Bank credit facilities that allow you to access the capital you have tied up in your gold and silver without selling you your gold and silver. The other thing that drives me crazy at Battle Bank, Daryl, I love this, is we have this thing called a checkbook IRA. I thought an IRA was just a repository for stuff from Wall Street, mutual funds and stocks and bonds, stuff like that. Turns out that your IRA can own an LLC, limited liability company. And that limited liability company can buy a franchise, it can buy a duplex, which you operate. It can do all kinds of things. At Battle Bank, your IRA actually becomes your IRA. Now, when they first told me about this, I didn't believe them. I said, no, I'm not going to jail for this. But the Battle Bank lawyers told my lawyers about this. Turns out to be completely true. And I'm really excited about that. I'm really excited about the fact that people can operate in a whole bunch of different asset classes for their retirement because most Americans have not saved well enough for the retirement that they'd like to enjoy. And they really have to explore all the possible options for their IRA.
Mm. Yeah, yeah, for sure. Yeah, agree. I mean, that's a lot of value there. What is so I know Battle Bank recently acquired another vehicle, and I don't know if that was to kind of speed the regulatory process up or whatnot. So it seems like things are getting close from some of the emails that I've received and such. And so, do you have anything to share regarding those? those
Well, it's very
aspects.
polite, Daryl. Thank you. We were almost 4 years in organization with Battle Bank, and the regulators weren't approving anybody. They just weren't approving anybody. I'm 72 years of age. I want to get this bank up and running. So what we did is we made agreement to buy a small community bank, a very, very, very small community bank. And mercifully, the people who sold us the bank are buying all the loans back, so we don't have to worry about buying any bad loans. We're not buying any loans. But that'll give us the ability, rather than going through the FDIC for a new bank charter, to just do a change of business plan with the Office of the Comptroller of Currency. So we reasonably expect, no guarantees, we reasonably expect to be open for business in June.
Mm. All right, you all be sure to go to battlebank.com, get on that list. You've heard a lot of the value that the bank is going to be offering people, so be sure to go check that out. And Rick, appreciate you for coming back on the show. So right now you're doing interviews with folks that are coming up from the symposium. So where can people, find more about that? I'm gonna link to some of the videos in the description, but just if you have anything
To
additional to
hear
share
all
about
the
that.
interviews, you go to the Rule Investment Media channel on YouTube. That's the best place to go. You can also go to the Rule Classroom, where, as you know, Daryl, we have a couple hundred hours of free instructional programming on how to invest in natural resources. So either of those two places, ruleinvestmentmedia.com or the Rule Classroom. To get information about the symposium, I think you're going to have the link, rulesymposium.com. Remember, once again, money back guarantee. Nobody else does that, just us.
Yeah, for sure, for sure. Well, appreciate you, Rick, for coming on the show and everything. Look forward to the next time, and look forward to Battle Bank, the Rule Symposium, everything. I got my tickets, I got my room and everything. I'm ready to go to work. It's kind of hard. Rick, everybody, Rick be on me. He be saying, get to work, get to work. But it's a lot of fun. It's a lot of fun. It's
We're
a lot
gonna
of
we're gonna give you a lot of opportunities to make money in Boca Raton. A lot of opportunities to learn. As you know, you'll get to visit with Nomi Prinz and Daniela DiMartino Booth and Jim Rickards and all these folks. And it isn't, as you know, all work. We have a wonderful boat cruise where people who make reservations early get to go out on the Intercoastal Canal, have their favorite beverage, and ask questions of Jim Rickards after I've poured a couple beverages into him. And then importantly, after the conference is all over, you have access to the conference recordings in case you had too many beverages and you missed a morning. It's all there. You can relearn the lessons time and time and time again over the course of a year. And the fact is, you could be perfectly well behaved like I was, and still there's so much programming in 50 hours that you can't absorb it all. So having the ability to replay those recordings, because a lot of this information is timeless, is something you have to do to get your money's worth.
Yep. Agreed. Well, you all be sure to click the link in the description below. Thank you, Rick, for coming on. Look forward to the next time.
Thank you, sir.